And good afternoon, everybody. This is Michael Filigera. I am with logicalsignals.com and tradershelpingtraders.com. And this is the Elliott wave update for the NASDAQ 100 for Monday, June 28th, 2021. The buyers returned today in force. Light volume, but they did come in and stuck around all day and pushed the NASDAQ above 14,500. We did that pretty early in the session. As those who have been following me now for a little bit know that I am counting the last 5 waves up to what I am saying is a long-term top. And what I mean by that is that, again, we are completing a primary third wave. And so what goes into that is we are finishing 5 waves of minute degree to complete a minute wave 5. And then we're completing a minor wave 5. And we're completing an intermediate wave 5. And then we're completing a primary wave 3. So we have quite a stack of 5 wave sequences that have now taken place over the last 13 years to get us to this point. And so I am feeling that we are staring down the barrel of the beginning of a primary 4th wave correction, which should kick off with a fairly steep punch in the jaw to the market, basically. And at the rate we're going, there's a whole bunch of factors that could declare the end and push this market lower. The best one that works for me is that it's just going to kind of tumble back over under its own weight. When this is all done, we're moving immediately into earnings. And if earnings are not stellar by stellar by stellar, I feel the market and participants will be heading for the exits. Doesn't mean that we're crashing, doesn't mean that it's the end of the world. It just absolutely means that we finished a primary degree and now we're going to correct in the primary degree, and then we're going to have another primary degree advance in the form of a 5th wave. This is a primary 3rd wave. That's what we're completing. If you've been also following me, you know that I'm constantly saying that a 3rd wave is the longest and the strongest. Well, this was on a primary degree. So it started in 2008. And it's basically the rally that came right off of the financial collapse, the economic crisis that we had in 2009. So it starts pretty much from that low. And it runs all the way through everything that we've gone through and gets us up to the point that we're at. So the pandemic, for example, that was an intermediate 4th wave decline, a correction on the intermediate degree. That's what that looked like. Well, now amplify that, because now we're going to look for that, but on a primary degree. Okay, so where are we then? I've been counting within this last 5 waves of minute degree to finish that minor 5. And within that, we are in that 5th wave. That 5th wave is subdividing. So these are sub-minute waves. And I am now labeling them 1, 2, 3, 4. Today, I believe, was either most of or all of sub-minute wave 5, which in turn should complete minute wave 5, which in turn should complete minor wave 5, etc., etc. So we're that close in my estimation. So here's now what I've taken further on that. We have our larger fibs, which measure the minute 5th wave. Those are here on the outside. And as we were discussing last night, we have, excuse me, the 618 way up here at 14,730. That would be the most common relationship between waves 5 and 3. But now, and when I take this particular internal, that would be wave 5, the minute, against wave 3, the minute. Now we go to the sub-level. And again, we're going to make that same comparison of wave 5 to wave 3. So this no longer, under how I'm looking at this right now, would be in consideration unless thing just absolutely blasts and puts on 200 points as it did today, but tomorrow. So the same thing that happened today would have to happen tomorrow for this to get up to here. But what it can do, and almost did, was it got to 14,519.75 today. And the resistance to complete it, in other words, the resistance at 0.618, so where we're 5 would be 618, 61.8, 61.8% the length of wave 3. And that's right here at 14,532.33. And then we have additional resistance of 14,563. And then we have additional resistance here at this 50% level, which I spoke of yesterday at 15,583. And then we have another resistance of 15,592. So this is all now being revised. I do think we still have some additional upside, although that got so close, that could be it. But I don't think so. I think that they'll come back in again tomorrow. Either that or they drive us lower tomorrow and they take the Dow and the Russell and the S&P stronger high. We'll wait and we'll see. Because today, again, the Dow was down 150. The NASDAQ was up 179, 180. It's like, okay, dichotomy there, direct opposites, but did not phase the NASDAQ. So that's where the funds were moving into today. So all of this position squaring and positioning for the end of the quarter and the balance of the year, whatever they're doing, was in tech today. So what do I expect for tomorrow? Where I'm at this point, folks, the market will tell us. Here are the possibilities. If we go up, we're into this zone. I really think this cluster, and we're connecting with the larger, we're connecting with where the minute wave 5 could end. And now we're just trying to go where we'll take it down 1 degree and work on where the sub-minute level's telling us. Well, this is the cluster right around that 50% level. So now I've got the sub cluster right around that. So that is going to be the high probability candidate to complete this 5th wave. And then we will wait and allow the market to tell us. Excuse me, sorry. Because the only other choice that I have in terms of labeling is labeling this 1, 2, putting a 3 there, a 4 there, and a 5 here, and labeling this minute, sub-minute wave 1. And if that's the case, this would be sub-minute wave 2, and we're just in the beginning of wave 3. That's a possibility, but I got to allow the market to tell me. But it is a possibility. And then we're back here dealing with these higher levels for completion, all the way up here. Now that 100-point level was about 15,000. That's all the way up here, 15,207. Right? That's where this wave 5 would be 100%, would be equal in length to that wave 3. Can it do it? Sure can. Can it go, you can go further? Sure can. And still fit under Elliott, because we remember yesterday I went back and I looked at this, the minute, and here, minute 1 is the shortest. So 3 is fairly long. 5 can come in longer. Wave 3 just cannot be the shortest, but it most often is the longest. But if wave 5 exceeds and goes longer, totally an acceptable view within Elliott. And that's all of those much higher levels. So those are our possibilities in accounting. I'm leaving it here right now, because at this point, we've pushed pretty high. The market had no problem breaking these highs. So either this whole swing has now totally convinced everybody to be bullish. And if that's the case, well, then it fits a topping pattern. But that topping pattern can really just explode and take us another 200, 300 points higher. I mean, it could take us 500 points higher. It could take us to 15,000. So we have to be able to trade it. So therefore, this is what I'm working on right now. But the alternate is that this is, excuse me, subminute wave 1 completion point. This is subminute wave 2, and we are off to the races in that third wave. And if by any means that it comes in at 1.618, it's going to end up here, or even higher. End up here. That wave 3 would end up here. 14,488, almost 14,900. Whew. Unbelievable. First place I'd look for definitely to get here. So we do have a lot of upside potential. The Fibonacci is telling us that. This is uncharted territory. So we don't have any chart points to go on. But the Fibonacci is telling us that this euphoria really pushes. These are the levels that it can get to as they start to break. Again, I'm not looking for any serious downside. If we get it, if the market does it, they're opening us a little bit lower, and starts to break back down below these levels and starts breaking below, so let's say the bottom here, 14,313. So it's going to have to break below the 200. If it breaks below the 200, then we're going to have to really put on our thinking caps and believe that this completed at least a 5-wave structure from there. Whether it's wave 1, whether it's wave 5, that will allow the market to tell us. But what we can be certain of is that we're finishing 5 up from this level, and we can draw Fibonacci's and give us levels down. But right now, that's where it would have to break to force that, okay, we've completed something, and now let's see where we're going. Other than that, I don't suspect that pullbacks will be very deep while they're into this end period of the quarter. I'm going to leave it right there. Please remember, continue to trade what's in front of you. Continue to use your moving averages to guide you and to also provide break levels to have a little bit of a change of trend. But again, reference it against where and what time frame chart you're looking at. If you're looking at a 1, a 2, and a 5-minute chart, that's your picture. It's 5 minutes. Then you can go out and you can double check against your 15, your 30, and your hourly chart. And if the moves are getting big enough, then you need to move out to your daily chart. And then you start looking at where your chart points are on for that level, that time frame. Okay, I'm going to leave it there. We are getting close to, I think we're going to get a major turn, but we may have to allow for another 500 points. That would be my max. Get us about 15,000. That would be craziness in my book. But we'll see. Next update, Tuesday, June 29th.